The Dow reversing course today, ending the day ultimately slightly higher, making the biggest comeback we've seen since June. It was down more than 400 at the lows. Goldman Sachs, Nike, JP Morgan led the index higher. Joining us now to talk about how to best position for the year ahead is Citigroup Chief U.S. Equity Strategist Tobias Lefkovich. He's got a $3,800 price target on the S&P 500. Welcome back, Tobias. This is the time of the year when we go through the targets. Jonathan Golub has you beat above 4,000. So it's kind of modest upside to where we are right now. How do you see the year shaping up? What's the narrative?
So I think that some of the stocks that have benefited the most, if you like, from the shutdown environment, in particular, the kind of growthier areas, which have huge market cap weights, could give off a little bit and back off. And on the other end of it, you're going to see some improving trends potentially in things like financials, which are already getting some benefit here from the news over the weekend about buybacks, but also industrial cyclicals, and most importantly, the consumer services side, hospitality, leisure, travel, entertainment, the stuff we haven't been able to do, even though we have $1.3 trillion of incremental savings in the country. But people are really kind of dying to get out there and do stuff again. A good buddy of ours from AB Global, going to be at the World Series of Poker in a week. A lot of us would love to be out there to cheer him on, but we're not going to be able to. On the other hand, get to middle of next year, second half next year, and even into 22, there's just going to be really powerful pent-up demand to get out and do things and entertain ourselves on the services side.
Yes, there are many things. I don't know, going to a poker tournament, it's not at the top of my list, but I'm glad it is for you, Tobias. The question is how much has already been factored in?
Look,
fair enough. I know you're Canadian. Isn't it already, how much is already in the market, right? We've already had this tremendous run up. And in a lot of the places that you just listed, cyclical groups, the Russell 2000, small caps, that whole rotation has already begun.
So what we've seen mostly is hedge funds have told us they've covered their short positions on the hedge fund side. And in these value areas, we've heard the long only institutions have reduced their underweights, but they haven't really gotten there. We did a survey over the weekend. We published it over the weekend. We did over the prior week or so, asking clients, what do you see going forward into 21? Where do you want to be? And the first area they like was consumer discretionary. We think heavily influenced by those services. The second area were industrials, third area financials. So they do want to go there. They just haven't gone there yet. And again, they've reduced their underweights, but they haven't really gone there for a number of reasons, including value hasn't worked for the past 10 years. So there's not a whole lot of faith in this. They need to see it almost the whites of their eyes kind of phenomenon. It's great news to have vaccines, and it gives us kind of visibility, what I call the lights at the end of the pandemic tunnel. But we need to be out there broadly accepted. That we're not getting stories about adverse side effects. There isn't manufacturing and logistical difficulties to get it out to people. All these are issues that still need to be resolved. And keep in mind, we still have a few hiccups potentially down the road, including the Georgia Senate elections.
Shepard Smith here. Thanks for watching CNBC on YouTube.